talk in front of a peer, Leanne, where we're in the same space, and so I've got imposter syndrome. I've got some nerves. Anyway, I know the answer to this. Who cares about the tax ed? Pretty much nobody but financial advisors, and maybe even some accountants. They're more worried about, getting your self-assessments and your company you're in. And I know that most people don't think about it, and most of us don't really need to think about it. It's not really something that actually affects us generally, but it does give us cause. You're here, you've got this 20 minutes or 15 minutes, I can't even remember how long it is. We may as well take this time to think about our money. There's no way that it's not going to help you, that it's not going to put you in a better step for tomorrow and feel a bit more confident and a bit more excited about what things are going to happen financially. So we're going to talk about being a sole trader, but also being a limited company. So one of the things that said in my breakout room is that actually your company year end is more important than than the government's tax year end. And if you run a limited company, then obviously you have two tax year ends that will give you cause for thought, a pause in a moment of going, does this mean something to me? Should I take action because this date is looming? We talk about tax all the time because if we're paying it to the government, which is inevitable in some ways, but if we're paying it, then we're not spending it, or we're not using it to invest in our business or in our life or in our family. So it's not necessarily about avoiding it or never paying it. But if there's a little tweak, if there's a little bit of every little helps, as Tesco says, if there's something you can do to pay a little bit less every now and then that's what we want. There are some decisions that you could make, and I think if you were to do this each year, the decision could be different each year. Each year you think about it, the outcome could be different. I will talk about 3 things that I do think that that we should all at least run through our tired, busy brains at this time of year. ISAs, pensions, and capital gains tax, for me personally, are the ones that are going to be the most likely to be useful. And then if I get to it, we'll have a little summary. I'm laughing really hard in this picture because tax is funny, and it's not. We all hate it. We hate our tax bill. We hate the balancing payments in January and in July, and some of us, if we've been working really hard and being successful, those bills can sneak up on us. So ultimately, the government 5th of April tax year end is a deadline. We all love a deadline. We need it, otherwise we would just push the decision on anything to the following week. We're busy. There's lots of things for us to do personally and in business and in life. So if you didn't have a deadline to submit your self-assessment, you probably would just never do it. If you didn't have a deadline to decide whether or not you're going to use your ISA allowance in this, or at least part of it, in this period of 12 months, you would just delay it. Same with pension. So yes, thank you, government, for saving us and at least giving us all a deadline. I will say though that ultimately for most of us, there are the allowances that the government give us, which are the ones that I'm talking about using to save tax, that finish on the 5th of April. Are another year rolls around, the next day all your allowances reset and it all starts again. And so I suspect that's probably why for I would say maybe a majority of people, it's just really not that big a deal. However, if we earn money, we put it into either our business account or our bank account. We either give it to our mortgage or to our kids or to the ridiculous food bills and that we're incurring right now, or it sits there and it waits for the emergency that in the car or the next holiday. But ideally, we have a little bit of extra money that we're not entirely sure what we're going to use it for, and we really want to try and save it. So we need to work out the homes for our pension, for our monies, short term, medium term, in the longer term, and all of these are strategies, they're ideas, there's benefits to be had from all of these homes that you can consider. And ultimately, I think most people, in terms of the regret situation, if to look back and go, oh gosh, I wish I should have thought about this earlier. If I had this conversation earlier, I would X, Y, and Z. And no one likes to feel like they haven't, missed the boat on something. So I do think that if you can use this time as I said, to run these things through your brain and go, is there something I'm missing? Is there something that's niggling me that I really need to work with? Your accountant, myself, Leanne, we're here to help. And shouldn't be scary, and it shouldn't cost you a ton of money. We want to share awareness on all these things that you are not taught in school, you are not taught in life. It's why this job exists. So yes, tax means less money in our pocket, less money to go on holiday with. So if we can save some of it, or at least direct it in a different way, that we will then spend in the future, then that's what I would prefer. So for those of you that aren't running a limited company and you do your self-assessment on, I didn't even see, I've done this presentation before. I didn't even update it for you guys because you're that special. I knew you know that it's the 5th of April 2024, but these things don't change. Some things change, and lots of government budget things are tweaked, but the general principles are the same all the time. So I personally run my self-employed. I have my self-assessments. I did last year's self-assessment in January, but I will call quits on my spreadsheet of expenses on the 5th of April. And this is my cause at this point to go, do I have extra money in my bank account that I should put into my pension this year? And I'm not talking 10, 20, 30, 40, 60,000 pounds. I'm talking like £1,000, something that goes in that means I can take some of that tax back and put it into my pension instead of giving it to the government. If you are keeping an eye on how much you've earned every month, which I think a lot of people, when you're not used to monitoring income coming in and it's variable and some months are different to others. If you get to this point in time and you don't have a spreadsheet or a piece of paper or your Xero account or your accountant logging all your income, you don't actually know if you're a higher rate taxpayer right now. You might have earned over £43,000 and you might not know. So keeping an eye on your money along the way so that you can sit in this point. The accountants right now, good ones, I think, good proactive ones, will be looking at their clients' accounts saying, you are now at the stage where you're a higher rate taxpayer this year. So that just gives you a pause to say, okay, do I want to try and take some of that higher rate tax back? Take it back and put it in a pension, and then I'll spend it another day. Hence why this period of time, I do have clients, myself included, am I going to put money into my pension? Is it 500 quid? Maybe it's £15,000. It's different for everybody. It's different every year. Like I said, some years you will have more money than others. Some years you'll have had more personal expenses than others, and therefore that impacts how much money you have to save. And so it's not necessarily about putting more money into your bank account right now, reducing your tax. It's about saying, okay, well, I've had to pay that tax to the government anyway. What if I just take some of that back and, as I said, redirect it, stick it in an account that's mine, that I will definitely spend one day, that I will definitely get to a different point in my life and go, oh, great, I have £50,000 in a pension. I don't really know exactly when I'm going to use it or what I'm going to use it for, but I know I'm going to use it. If I don't use it, I'm going to give it to my family. So that's probably the biggest one as a sole trader, self-employed, is just that idea of also you might buy yourself a new laptop or do something else. Has anyone got any expenses for their business? I accidentally bought something for a charity, so I need to do something about my charitable givings this tax year. I just bought a new house, so I'm not putting money into my pension this year. It's not an obligation, you know, it's not a essential. It's not I'm not disappointed in myself because I'm not doing it. I just had a different year. And that is why it's good that these things roll around and we get to continually have these conversations. So what I was talking about before is if you've earned your money and it's gone into an account and you've siphoned off hopefully a little tax account, and then you have your bank account, and then you've had to give money into your mortgage bills and all that sort of stuff. You've got your cash savings. Hopefully now everyone's benefiting from a little bit of interest for the first time in a long time. we need to keep some accessible. We need to have some in an account that is that you can get in, you can get it easily if you need it, and you'll get an okay-ish tax interest rate for that. And the next place that you might think about for, again, extra cash, hopefully everyone is, we're sensible, and if for self-employed, no one's looking after us. We're doing this all by ourselves, so we're the ones that have to look after our financial security. So hopefully we do have a little bit extra money. No matter what age you are, no matter what your financial position is, a little bit a safety net is the way to go. And you can tuck a little bit of extra money away in an account that's going to give you even better interest, because you're probably not going to touch it in the next 9, 10, 12 months. This is where this tax year end business comes into for cash ISAs. Cash ISAs, stocks and shares ISAs, fantastic. You can save every year £20,000 into an ISA, an individual savings account. And that's a lot of money. If you were to do that even once every now and then in a year, you'll never pay another penny's tax on that money ever again. You will never pay money on the interest that you get on it. And if it was to grow, you won't pay any capital gains tax on it when you take it out and spend it down the way. So all I save in is my pension and my ISA. And I use the stocks and shares ISA for mostly. I don't actually have a cash ISA. Probably should. I just haven't got around to opening one. I'm like not practicing what I preach, which is terrible. This is the first time in my adult life where I've actually had to go and open up bank accounts. I don't know if anyone feels the same, where actually there are accounts out there where I could be getting more money just to have my tax account sitting around doing something. So I haven't actually got around to opening up a cash ISA, but you do have an allowance, and once it's gone, it's gone. So next year, yes, you can save another 20,000, but we might want that next year. If you won the lottery next year, you'd want your full ISA allowance to put some of your money in. You'd want your full pension allowance to put some of your money in, pension in that as well. So I think that even if you're putting £500 into your cash ISA or £10,000 into a cash ISA or the ISA environment, I think it's worth doing, because over time, whatever interest you get, whatever growth you get, we will end up having to give a little percentage of that away most of the time. So it's an allowance there that's going to protect our money. And I also think as well that it kind of ring fences it for you. Even mentally, you can say, okay, that's money that I'm not going to spend in a year. And if I do spend it, well, it means that there's something gone slightly awry with my spending or income. Or you can then add it to your list of things that you have and watch your savings grow, watch your assets grow. I've talked a bit there just about cash, but investing it is either investing your excess cash at this time of year is just about choosing which wrapper to go into, whether it goes into a pension, whether it goes into the ISA. My personal opinion is you should be doing a bit of both. If you had £1,000, I would be putting £500 into my pension and £500 into my ISA. So I'm getting the best of both worlds. The pension, it really depends on how old you are, whether or not you can afford to set that aside for a long period of time. I won't be able to get my pension until I'm 57. So if I put it in now, I have to know that I don't need that next year or the year after or the year after that. It's getting slightly closer these days, I have to say, but not close enough. So it has to be a considered choice. You don't put a lump of money in your pension without really thinking about, I don't need this money and I don't want to spend this money. I want to lock it away. I want to protect it for my future self. And then when you do use these allowances and you do take this time to consider where your cash is, where does it belong, what role is it playing in your life, we can make some smart decisions and pay less tax, have more money in the future. So use this as a deadline to assess and make a call on some of your actions. And if I was to give you one exercise right now, if you have a piece of paper, and no one's going to ask you this, what would you write down on this, but I'm always curious to know if people have a sense of how much money they have right now, in the sense of how much is in your current account, how much do you have in your savings, and if you have a tax account, which I would like to think most of us are being very diligent in saving for our tax bill, if you were to add all those things up and actually visually see how much money you are sitting on, because we're all probably sitting on something. I do think that visibility and actually understanding, that all those little pots add up and that there is interest to be had, and you will pay tax on that, some of that interest. So we should be aware of, the allowances we have. I'm just going to really quickly check just out of, I use Money Savings Expert, our famous Mr. Lewis. And I just really wanted to quickly confirm to myself, top cash ISA right now changes all the time. Plum, 5.1% for an easy access. So 5.1% for a year if you put money into a Plum ISA. That's a lot of money. That's, if you've got £10,000, there's over 500 quid just for sticking it in an account and leaving it. That's a nice little weekend away, I think. I mean, all you have to do is just think about your money, assess what you have, keep a track of it, and make it, open up a bank account. Obviously, that's probably the biggest pain point that we have. I think I've talked about most of this as an individual. So I talked about it as a self-employed person if you're, running your business account, but as an individual, it almost works. It works the same in the sense that it's me as an individual. I think about my pension. I think about my ISA. I'm not putting any money into my ISA either. I'm doing a regular, but I'm not topping it up right now. The only other thing I haven't mentioned, which I was going to, is about capital gains tax. So this is the idea that if you were going to sell a buy-to-let property, or you sell some shares that your granddad gifted you, which happens so often. It's so weird how many portfolios of AstraZeneca shares just sort of filter down through the generations. If you hold something like that for a decent amount of time and it grows, and you sell an asset like that, you could end up paying some capital gains tax on it. And that capital gains tax allowance rolls over every year, and it's changing. It used to be quite bad 10, 15 years ago, and then it got really good in the sense that you could create quite a lot of gain before you have to pay tax on it. And now they're, in our current economic climate, the gains are going down again, where at the minute, or you're about to be £6,000 this year before you pay capital gains, and then it's going down to 3 as of next month. So if you were about to sell shares, and this is why it's an important deadline, if you were you can't sell a property in this time, but if you were about to sell shares and you think there be a gain on there, then you'd want to do it now in this tax year rather than waiting, because you'll end up paying more capital gains tax in the following year. That is a relatively unique thing, and sometimes, the budget, they have changed those allowances. Sometimes they don't change them, but that is one reason. If you were to ask someone, a professional person's advice, when should I sell this asset, this is a tax year end is a reason that is a benchmarker, or whatever the word it is I'm looking for, to decide when you should do it. When is the best time to do something like that? High earners who earn over £100,000 are in a slightly unique situation where things start to get worse at that point, and in the sense that you get taxed more and you start losing allowances. So again, it would make sense to try and take some action at this time of year to manage how much your actual income was looking like it was going to be. And then you can just make some efficiencies in there, that if that is a problem, or if you know of someone who might have that problem, it really wouldn't take that much just to have a conversation and think about it. And you're either good and you don't need to take any action, and there's nothing you can do, and you can go, yep, I've ticked a box, I don't need to worry. Or maybe there is something you can do, and you can pat yourself on the back and go, yes, I have saved a bit of money. Okay, a little bit of a summary. Although because I wrote this slide a while ago, I can't really remember what I was going to say. I've just updated that third one. Cash ISA fixed for 1 year, 4% Barclays. So I've just told you it's Plum at 5.11. So who knows what it will be next year, or the year after that, or the year after that. So April is our deadline. I hope that it's at least sparked some question to yourself. And if not this year, definitely next year, or not now, if not now, at the end of your company year. I'm a massive fan of pension. I think that pension equals money in the future. Money in the future equals not working. Not working equals going on holiday. And holiday equals peace and happiness. And you know, I'm not expecting an inheritance. I know for a fact that my dad has spent it all. He has not saved me anything. So I'm the only one that's going to give me, even if I love my job, I still want to retire. I do. I just feel like that's something that my future self is going to want. And the only person that's going to be able to give that to me is me. And the best way for me to do that is looking at my pension. I've stared at that word so long and said it so many times, it doesn't even make any sense these days. If you were to had a portfolio of shares, and if you were worried about capital gains tax, then you can use these these years to try and manage that, to reduce the impact. If we invest in something, if we hold something and it grows, and you see that value grow, and you think, great, I have X amount of money and I'm going to spend that one day. And then when it comes to selling it and using it, it actually gets eaten into by tax. That just, no one likes that. We don't like that at all. I personally believe that we should take time to have these conversations with ourselves, to think about our pension, to think about our cash ISA. It's really hard to take action. I could send you a link and say, open up a Plum bank account and put your money in there. And I bet there'll be a hesitation, there'll be a question, there'll be something that you're just not quite sure about. And so the biggest thing I can do is to offer you support, no issues, a question on Instagram or an email, no stupid questions. Anything I can do to help you feel like you can take a step forward and look after your money and have more of it in the future, then that's what we're here to do. So I always have in my Instagram, I always have a link where you can go into Calendly and book some time in, and I don't have to charge you for that time. But I know that it's helpful, and I know that you'll have a pension question, because very few people totally get what it's all about. Even sometimes I still struggle, because again, it's complicated and we don't get taught it. So this is a resource, use it. And thank you.